The best AI trade right now isn't NVIDIA. It is fixing air conditioners for server farms.
Ecolab dropping 4.8 billion on CoolIT proves it. But the real story? KKR's shared ownership model means the factory workers are actually getting a cut.
Sure, but let's be real. KKR kept the absolute lion's share. It is a PR masterclass.
Oh, come on. I read the filings. Those are life-changing checks for hourly employees. Give them a win.
Fine, between that payout and Merck dropping 6.7 billion on Terns, the cash cannon is officially firing today. The rundown, $5.5 billion for uniform rentals.
Cinta's buying UniFirst. You're weirdly excited about laundry.
I love boring businesses with sticky revenue. You get your corporate logo stitched on a polo. You never change providers. It's the ultimate moat.
The ultimate moat is literal grease stains, Nate. But sure, the operational scale makes sense. Analysts are screaming about building sector M&A being highly resilient right now because it's so fragmented.
Speaking of building, Apollo is dropping $3.7 billion to take Nippon Sheet Glass private.
Which is massive for Japan. We keep talking about private equity finally cracking the Japanese market, and Apollo just kicked the door down.
Let's go from glass to drugs. Merck is swallowing Terns Pharmaceuticals for $6.7 billion.
$53 a share. The stock went completely parabolic.
They had to do it. Deal makers are incredibly optimistic for 2026, but everyone's terrified of shifting profit pools. Merck needed this pipeline.
I don't buy that narrative. It's a massive overpay. Terns has interesting clinical data, but a $6 billion premium for a pipeline that could still blow up in phase 3. That's just panic buying.
It's strategic defense. You pay the premium so Pfizer doesn't get it.
I read the footnotes on Terns' last quarterly filing. Their cash burn was accelerating. Merck just bailed them out.
Well, the market clearly loves a bailout. Just look at the gossip out of JetBlue. Shares are jumping on rumors they're actively exploring a sale.
Oh, come on. Who is buying JetBlue right now? The DOJ just spent 2 years blocking their Spirit merger.
A brave private equity firm?
With their debt load? Absolutely not. I need to see a term sheet before I believe a word of that.
Fine, shoot down my gossip. What about the mortgage sector? Two Harbors just officially declared CrossCountry's $10.70 proposal superior to the UWM Holdings bid.
An actual bidding war for a mortgage company in this rate environment. Now that's genuinely surprising.
Almost as surprising as a buyout shop willingly sharing the wealth on a $4.8 billion exit.
You're talking about the CoolIT deal. KKR selling to Ecolab.
The data center cooling premium is real, and the workers are actually cashing in. The big one, $4.8 billion for a company that essentially makes very fancy ice packs for servers. I absolutely love it.
You say fancy ice packs. Ecolab says mission-critical AI infrastructure. But honestly, Nate, I am looking at this price tag. $4.8 billion? Ecolab is a water treatment and chemical giant. Now they are buying CoolIT from KKR. It feels like they just wanted to buy a very expensive ticket onto the AI hype train.
Oh, come on, Maya. You know it is way more than hype. Look at the power density of these new chips. You cannot cool them with just fans blowing air anymore. You need direct liquid cooling. CoolIT is the dominant player there. Ecolab already handles complex water management for industrial sites. It is a perfect marriage of plumbing and high tech.
A very expensive marriage. I read the release. Yes, the data center cooling market is expanding, but Ecolab is paying an absolute premium here. This smells like a classic case of an old-school industrial company panicking because their multiples are stagnant, so they buy an AI-adjacent asset just to spice up their earnings call.
Spoken like a true cynic. I will take the other side of that trade. They are buying a permanent moat. Every major tech firm is building out massive data centers right now, and they are all genuinely terrified of their servers melting down. Ecolab is not buying an AI narrative. They are buying the fire extinguisher for the AI boom.
Okay, fine. The fire extinguisher analogy actually works, but the part of this deal that really made me sit up was buried in the KKR side of the paperwork.
The employee payout.
Exactly. KKR used their shared ownership model on this one. The line-level workers at CoolIT are getting a direct cut of this sale. We are talking about assembly workers and technicians cashing in on an AI-driven exit.
Which is completely wild to see in a buyout this size. Private equity gets a lot of grief, and as a former banker, I've handed out my share of pink slips post-merger. But KKR actually cut the workers in on the upside here.
Do not get too romantic about it, Nate. KKR just scored one of their biggest exits in recent years. They made an absolute killing so they can afford to share the wealth. Though I will admit, seeing an Excel model that actually factors in paying the warehouse staff is a genuinely nice plot twist.
It is smart business. You keep the talent locked in while you scale up for a massive sale.
Speaking of massive sales and premium price tags, Ecolab is not the only one writing giant checks today. Merck just dropped $6.7 billion to swallow Terns Pharmaceuticals. Sadganit voices.
So I was reading this morning's analyst notes, and the consensus is that deal makers remain highly optimistic for the rest of 2026. The exact quote is that companies have an urgent need to adapt to tech disruption and shifting profit pools, driving near record deal values.
Shifting profit pools. Give me a break. That is just banker speak for we missed the AI boat and now we are panic buying.
Hey, I used to write those notes. It is a perfectly good phrase. And the thesis holds up. Look at the Australian utility scale battery market. Market watchers are saying it just hit a major inflection point. Battery energy storage is suddenly the absolute center of grid reliability M&A.
I will give you the battery stuff. The capital is flowing there because the yield actually pencils out. But those same analysts are calling real estate and building M&A highly resilient. Resilient? Have they looked at the cost of debt?
They are arguing the resilience comes from fragmentation. It is a classic roll-up play, Maya. You buy 20 tiny regional builders because you desperately need operational scale to survive the margin squeeze.
You buy 20 tiny regional builders because you want to hide your bad margins in integration costs. Show me the actual organic growth.
You are so cynical today.
I read the footnotes, Nate. Dealmaker optimism is free. Cash is expensive.
Well, speaking of proving it with cash, tomorrow we get to see if those roll-up dreams actually work. Banijay Group is hosting a massive strategic update.
Right. They have to detail the fallout from those Tipico Group and all three media acquisitions.
Exactly. They are promising €100 million in midterm synergies. We will see if that is actual cash or just more shifting profit pools right after this. Spill the tea. I am just saying, if you look at the options market right now, somebody knows something about JetBlue. The stock is jumping on these sale rumors, and I am here for the drama.
Nate, who on earth is buying JetBlue in this regulatory environment? The DOJ literally just blocked them from buying Spirit. You think they're going to let a competitor swoop in and buy them now?
Hear me out. Private equity, they love a distressed asset with a good loyalty program. It is classic banker math. You securitize the points, lease back the planes.
I will believe it when I see a filing. Right now it is just bored traders making noise.
Fine, be a skeptic. But you cannot deny the drama over in the mortgage sector. Two Harbors just officially slapped UWM Holdings in the face.
Oh, the cross-country bid, $10.70 a share.
Exactly. Two Harbors formally declared the cross-country proposal superior. A public bidding war in the mortgage space is beautiful. UWM has to be fuming right now.
It is actually smart. Analysts keep saying real estate M&A is resilient because of the desperate need for scale. CrossCountry clearly looked at UWM's offer and decided to squeeze them by just a few cents to force their hand.
Speaking of forcing a hand, the biotech whispers are getting very loud about Johnson & Johnson circling nanobiotics for a buyout.
Another day, another pharma giant swallowing a biotech firm. Though if J&J is actually writing a buyout check, I want to see the clinical trial footnotes they base that valuation on.
You and your footnotes. Well, speaking of checking the math, I am clearing my calendar tomorrow morning for the Banijay Group strategic update.
Right. They are detailing those €100 million in synergies from the Tipico and all three media acquisitions.
€100 million in midterm synergies. I want to hear exactly how many reality TV producers they have to fire to hit that number. But before we get to tomorrow's updates, we need to talk about KKR actually paying workers in this massive $4.8 billion Ecolab deal. Tomorrow's radar. I am clearing my morning for Banerjee Group's strategic update. They are promising 100 million euros in midterm synergies from the Tipico and all three media deals.
You actually believe that number? It is pure corporate theatre. Integrating sports betting and reality TV production doesn't magically print 100 million euros.
Oh, come on. Do not underestimate a banker with a good spreadsheet. But fine, you want something juicier? JetBlue shares are jumping. The sale rumors are getting incredibly loud.
A JetBlue buyout right now, after the Spirit block? The regulatory risk alone is radioactive. Who would even try it?
Private equity loves a distressed asset with good branding. Keep an eye on Columbia Acquisition Corp 3 tomorrow, too. The shares and warrants finally start trading separately.
Ah, yes, SPACI warrants. Because what this market really needs is more detached financial engineering.
Spoken like a true hater, we will see whose radar is right when the opening bell rings tomorrow.